Brett Riggins joins me here today, and you can learn more what he's up to by going to physicianwealthsystems.com. We're going to be talking about everything from niching down to his formula here and his niche on this. You seem to have targeted a particular group of individuals here, so this is going to be really interesting. Again, it's physicianswealthsystems.com. But I hate to do this to you, Brett, but I have to start off by asking when you got into real estate investing and then finding your way to the particular niche and I'm guessing you're finding private money in this group.
Yeah, I love it. Well, thank you first for welcoming to the show. I really appreciate your time, Jack. And to the listeners out there today, thank you for your time as well, too. I'm excited to jump into the conversation. That is a great question, where I started in real estate. And I think it goes all the way back to where I started in my passion for my career in architectural engineering, construction management was my background. So I've been in and around building. My parents built their first house when I was, I think, 7 years old. They ended up losing it to a short sale. That kind of like filled the direct to seller kind of empathy that I have. But I bought my first house in 07. And that's a wonderful story that we could talk for a half an hour on in itself. 08 happened, and the town that I bought this house in, they shut down the school systems. So everything went wrong with this purchase. I had it for 2 years. I was in and out. It was going to be a quick flip where we say we clean the trash and cut the grass, but that didn't work. So we ended up holding on to it for 2 years. I put a little bit of money into it and we were able to sell it. So the first one was going to be a quick turn. It did not work. I cut my teeth as a landlord and then ended up selling it. And that kind of didn't give me a sour taste, but it definitely made me realize I needed to surround myself with the right people. And Jack, I'm sure you could understand that surrounding yourself with the right people gives you an inflection point in life, not only as an investor, but as a person. That was really important. So in about, I think it was 2015, we were able to do that. My wife and I joined a group called the Fortune Builders. You may have heard of them. It was just a wonderful journey to invest in ourselves and surround ourselves with everything we didn't have on that first deal. That was a major inflection point for us in our life. And quickly we went from doing 2-3 flips at a time to 6 flips at a time. And in that journey, we were leveraging private money. And that's where we started working directly with physicians. And that grew into the opportunity that we have today with Physician Wealth Systems, leveraging all those years of experience, trials, pain, crying, tears, blood, bleeding money, all of that stuff. Now getting able to share that with physicians directly as we build turnkey real estate investment businesses for physicians and high income earners.
Oh, okay. Well, be curious. We won't have time to go into details on that first property, but I would like to have a little understanding, because sometimes when we get into this real estate game, I don't want to call ourselves brainwashed to a certain extent, but sometimes we kind of ignore those red flags. Was that the situation here, or?
Yeah. So in 07, things were just a little bit different then. It was like the front end of .com, like YouTube. All of these things weren't as prevalent as they were now. Speed of data, speed of communication wasn't quite there yet. So it wasn't that. For me, it might have been the opportunity itself was blinding. And today feels a little different, to where everybody's going to advertise hey, I've done this many flips and come follow me and do this. So that can be blinding. But for me, it was the opportunity. Hey, I can do this. At the time I was, licensed general contractor, and I figured, hey, I can do this. I can sweat equity. That's what I had then, was the time. So that was blinding for me. And I still struggle with that. And my wife could add to that, Jack, of I guess it is the shiny object syndrome, right? Opportunity is a shiny object for me that I've got to watch out for.
Well, we as entrepreneurs and real estate investors, we're always distracted by that next best thing. Mm-hmm. At what point, or what made the change to you to realize that you needed to focus on turnkey, and then maybe even go as far as focusing on physicians?
Yeah, well, early on in Fortune Builders, I always tell everybody, it gives me goosebumps to go back to that moment and have that feeling sitting in this, hotel lot or whatever, where you rent the spaces out in the hotels, and going over that first idea of long-term rentals, and it blew my mind. And every time I think about it, I still get goosebumps in the way that I can purchase a house, leverage the capital, and have this arbitrage of not only the stackable returns, cash flow, principal pay down, depreciation, and appreciation also. But that was just mind blowing to me. So that was the biggest piece for us, flipping and then wholesaling, going from flipping 2x4s to flipping paper. That was a big change as well too. But these were creating these bubbles of capital, and we were able to then create our own passive income, air quotations for the listeners, passive income portfolio with these long-term holds. That was a really good focus for us. But in order to get these bubbles of capital, not coming from a big pool of capital, we learned through the Fortune Builder family, that private money lending scenario. How can I pitch my idea or my opportunity to private lenders? And that was the nitrous oxide for our racing engine. It enabled me to go from not having really much of anything to living life by design now.
Mm-hmm. So you've niched down, you've got a business, physicianswealthsystems.com, and you've niched down to targeting this population for your, we talk about, in my world, we talk about busy professionals all the time, but you've even gone as far as niching down to the physician level. Is that, when you decided to niche, did you see an increase in your business?
Yeah, that's a great question too. And it's a journey looking back when this happened. You've probably heard before, the riches are in the niches kind of thing. For us, it was a changing time in the market where the hedges started bailing out. The investment objectives were changing, was cost of money was changing. There was lots of movement, lots of volatility happening. And at that point in time was the point where I had an idea of, hey, I'm always getting asked, how can we get these kind of deals? How can we get equity, Brett? We want to do this with you, that kind of thing. And at the time, like, I just couldn't, right? I couldn't figure that out to where it would make sense. But it's about a year and a half ago now, it's like, hey, what if, instead of being private lenders, I could plug them into my acquisition machine. So my nationwide real estate acquisition company, Connect Home Buyers, is still the driving force for that. And then leveraging our team of, our power team in the real estate world, we can then stabilize these assets and build these portfolios for the physicians. So at that point, my life actually streamlined as well. We went from 13 employees. I don't have any employees now. So we extremely reduced what we were doing to focus in on our energy on what we were doing. So we niched in what we're doing, and then we also streamlined the business as well too.
So have you found that at a certain point then you have to find ways to turn some people away because they don't fall within your niche, or do you try to accommodate everybody that comes in?
Yeah, it's a learning process, and it's so niche too, Jack, that it's like I don't I don't have any employees. I'm only working with a very select few clients. And in that process, it's really that the requirements, the deployable capital almost, either it says, hey, we're going to do this or not. And I don't have to be a salesman in that regard to say, if this is a great fit, I would love to build a relationship with you and basically show you what we've done. Right. Mm-hmm. So the requirements to kind of make it work are there. And sometimes, I do get to choose whether or not I want to work with somebody. And it's just like, if we were acquiring equity together, I want to make sure that, hey, we complement each other, there's no awkward phone calls, and we just get along with each other. That's really important. So we're building that trust, because it's, the thing about it's a lot. We do 12 properties in 12 months with our clients.
So did you find that your marketing strategies have changed then as you're targeting these individuals?
Yeah. So we've got two different things. We've got property acquisition and then client acquisition. So two totally different things. And the property acquisition, we're niched down as well too. So we're down to a single market, looking very particular investments to reach our investment objectives. So that really fine tunes us. And now we know in our specific markets where, hey, my acquisition team knows one side of the street to the other, right? So we're fine tuned on that. And then as far as client acquisition goes, it's just about getting the word out and making that connection with people. So, just kind of keeping it open, because coming from the outside, and I'm not a physician. So, it's kind of getting over that trust wall and building those relationships is huge, because a lot of us will kind of stay inside of our circle when we are reaching out and building relationships. So getting inside of that trust wall was really big. And, as soon as we talk, as soon as I take a client through, I can show them a client that we've gone through. The first client we did 15 properties with, and, that there's real world evidence that, hey, this is working,
So I'd be curious then, and we probably can talk about this in more detail after here in a few minutes, but you mentioned a single market now. What would you mind sharing which market you're targeting?
Yeah, absolutely. So Memphis is our major market right now. And I tell all the clients too, is like when we do, because I always get the question too, is, hey, what happens after 12 months? What after we do 12 properties? Well, you could do another 12, but I like stepping into bigger assets at that point and showing them to then scale away basically from single family. I love single family as a foundation, as a building block, but also looking at different markets as well too. So Memphis is a great market for us to get in because of our team that's there, construction team, our property management team, our brokerage, those kinds of things are there. It's really strong. Other markets looking at, Indianapolis is kind of always caught my eye. And then,
Don't do it.
kind of, what's that?
Don't do it.
Don't do it. Oh, that's interesting. Why you say that, Jack?
No, I just had a very bad experience in Indianapolis.
Okay. So yeah, so there's things, and then when I'm looking at it too, it's more on a scalable scenario. So I'm not just looking at one house, two house kind of deal. I want to make sure that going in, I want to be able to do 50, 60 houses. In that same idea of deploying economies of scale. But yeah, Memphis is a great power punch. Just because of the investment objectives that we're going for, we know that we can hit those consistently and then manage a quality asset year over year.
Sure. So I would imagine then, since you're dealing with physicians, since you've been niching down, have you found that their preferences regarding the product has also been easier to define? You mentioned that you're in a single market. It's easy for you to understand both sides of the street, what type of properties you're dealing with. But, I'm just guessing here, but I would imagine that they are possibly looking for more stable type investments instead of, it's not just the returns at that point. Does that make sense?
Yeah, each person is going to be a little bit different, but ultimately, we have to agree on the investment objectives. Once the investment objectives are agreed on, that's what we go out and hit. And the product, the asset that we're acquiring is a nice, neat, clean, mechanically sound asset, right? And we are attacking the capital expenditures out front. We're making sure that this cash flow is as predictable as possible for the next 10, 15 years. So it's a long-term solution with long-term people. Those are the types of relationships that we're building, and the asset itself detaching from that. The reason why we're in this market is we know the consistency of the value, right? The consistency of the rent, those kind of things. That's going to mitigate that loss risk, right?
So it almost sounds like you understand, or you go through the process of understanding your investor and then find the property versus finding the property and then hoping the money comes.
Outside in approach when it comes to acquiring assets, and that's what's put us in our specific markets. And from there, moving forward, it's finding. So we've got the property acquisition and the client acquisition. We know what that property is going to be. We know what we're asking for. We know the team that's going to manage that. And the client acquisition is just that relationship that we can build the trust to understand, hey, this is our target. This is what we're shooting for. Then it really is, there is no question, right? When we go out and put these properties in contract, we get them closed up, we get them renovated, we get them marketed, stabilized, refinance, all of that stuff. We know what that output is going to be. It's going to hit our investment objectives. So that house can be pink, purple, brown, or black. It doesn't matter. It can be 2-bedroom. It can be 4-bedroom. It doesn't matter. We know we've agreed upon our investment objectives, and that's the main perspective that we're looking at. We're making sure that we're looking at this as a business and not as a landlord. I don't want to get emotionally attached to a house, you know?
Yeah, that's one of the reasons why I always suggest, I've heard more and more people wanting to turn that first house that they ever bought into a rental property.
Accidental landlord, yeah.
Yeah, it usually doesn't work out because you have this emotional attachment to that first, especially that first house.
When I've had through the years, I've had sales teams and acquisition teams, and I would always have these one acquisition people who would be like, they come and show me a house and be, oh, this is so cute, Brett, look in this and look at the shutters. And I'm like, I don't want to see it. I don't want to see it. Show me the numbers, right? I just want to see the numbers. I don't want to get emotionally attached to it. I really don't care how pretty it is. What we're asking for in our investment objectives. That's what I'm looking for. So we have that innate kind of draw to have that emotional attachment to the houses.
Sure. Just to remind everybody, head over to physicianswealthsystems.com so you can learn what Brett and his team are up to. Physicians Wealth Systems. And if you found some value in what we're talking about so far, do us a quick favor and share this episode with one of your real estate investing friends. And if you're watching us on YouTube, give us a quick like and subscribe to the channel. So, Brett, I'd be curious, you mentioned you were part of Wealth Builders. Could you give me a little insight on the benefits that you saw getting that type of coaching? And it doesn't have to be fortune builders for that matter. Yeah. Just what do you think the value of mentorship in the real estate world in accelerating your business?
Massive. If you want to, go fast or speed your time up. I was trying to think of something like Back to the Future, time travel. There it is. Sorry about that, Jack. So if you time travel, it's investing in yourself. It's surrounding yourself with the right people and having that mentor who's been through what you want to do. If you look around and surround yourself with the people who are already doing what you want to do, then they're going to be in the right spot. And have that relationship with them or that agreement with them to where you can ask these questions or they can provide you with these resources. When I'm working with somebody or when I'm sharing my experience with somebody, I want to share exactly what we're doing to produce the outcome that we're seeking. So it's just like a fast forward ability and to maybe even jump over some of the hurdles that may have caught them in the past. Where the failures, the bad things, the people to watch out for. So you can leverage not only the good things, but leverage how to avoid the bad things as well too. It is monumental. Every major inflection point in my life, Jack, has been investing in myself and means of working with a mastermind or being with the right group of people. Along with that, I will also raise the caution flag, and you got to know who you're working with. You got to know, are they investors themselves? How many cycles have they been through? How many bad times have they been through? What are some of the biggest challenges they've gone through? Because like I had said before, on social media now, the speed of data, our lack of attention, all of these things, we're going to see the sunny side, right? We're going to see the sunshine and rainbows. But when you're working with somebody, understand when it's not all sunshine and rainbows, how did it turn out? Right? Mm-hmm. That's where on the other side of pain is where growth lives. Where was the pain for them? And are they still doing it is really important too. But yeah, reach out. Don't let that stop you, but also proceed with caution.
Right. I'd be with all of that. Did fortune builders then kind of give you the ground floor of the information you needed to? I would imagine you have some processes and systems in place. You get a property under contract or you get it purchased. And then there has to be a process now that your team follows in every scenario to make sure everything is done to your specifications.
Absolutely. Absolutely. And that's, if there's a process, there should be a procedure, right? SOP, standard operating procedures. Every time I touch something, I want to write out that procedure. Learn, implement, and outsource. And everything that we do, I want to make sure that we're creating that. And Fortune Builders was, it was such, and I hear this so many different directions. I have the naysayers about Fortune Builders, and the people that are doing well from Fortune Builders. So everybody has their own opinion. For myself and my wife, it was, like I say, an inflection point for us. It's where we're introduced to the books, right? That changed our life, and the systems that changed our life. It's amazing. So yeah, from that point forward, and now being an entrepreneur as well, building businesses and delegating and leading and all of those things. Yeah, there are processes. And even with those processes in place, some things still get missed, right? We're people. When we add the person side to the process, that's where we have the ability or the risk to miss things. But these days, we're integrating and automating as much as possible too. So what used to take me about 4 hours when we did pre-close, I call it a pre-close automation, would take me 4 hours creating folders and sending emails and all of this stuff. I've got a single automation that I do now with a simple jot form. I fill out the information from the particular deal, and boom, it happens in about 5 minutes now. So we've leveraged integration and automation to simplify a lot of what we're doing.
Yeah, and it's kind of crazy how fast that technology is moving right now. Well, it always has been moving really quickly, but with large language models and a few other things, it's really starting to speed some things up.
Yep.
So I'd be curious as to your mindset then when you're early on, you decided to invest in yourself through Fortune Builders. I would imagine your wife is involved in this as well. What type of turmoil did you go through to decide that this was an investment versus an expense?
Well, it wasn't any turmoil at all, because just like that first deal that I got, I saw the opportunity, right? So I'm the dreamer. I'm just like, let it loose. I'm going to give it everything I have. I struggle with the perception of time is what I struggle with. So even though I can do this and I'll get everything I have, I can't tell if it's going to be 10 days or 10 years, right? I just go at it. I put my head down and go. My wife, it was awesome too on that first mastermind that we're in, that sales process, including your partner or your significant other, because it was a massive life decision. But in that presentation, they touched on some major pain points that I think helped convert us to do this as a family, to go from an expense to an investment. And that investment was in us to get to that point where we're free, right? To get to that point where we have time freedom, location freedom, all of these things to live life by design. Now looking back all of these years, but it was just that bringing us both together. And when I'm working with other investors too, I want to make sure that not only are we on page, but is your wife on page, is your husband on page? Is this, it's got to be a family decision.
Yeah. This is one of those things that I keep echoing, and I'm sure people are starting to get annoyed with it, but I strongly believe that we have to establish a strong enough why in order to override any kind of pain. We have a tendency of not wanting to work towards pleasure, but we will react to pain, and only establishing that why is the key there.
Yeah. Yeah. And why it's so hard too. And I still struggle with that too, Jack, like trying to understand between my why and what my gift is. I'm always trying to figure this out. And sometimes I even get worried. Like I can't put my finger on it yet, but I think it's still okay if you can't put your finger on it, but it's still a magnet that's pulling you forward, and every single day, you're a better version of yourself. You're headed in the right direction. So not being able to put your finger on it, but if it's still pulling you in that direction, you're getting better each and every day being a person. Because you've heard it said a lot. It's the goal itself it's not that, but it's who you become on your way to reaching those goals is what's important. So even though we can't put our finger on our why specifically, or our gifts, our talents, right? I think they will pull us like a magnet through these hard times until that time when we are supposed to know, hey, what is my why? What is my gift?
Well, can you give me an example of one of these clients that you've helped? You early on in our conversation, you talked about one physician buying 15 properties. That's those numbers are relatively shocking to a lot of people that are listening to this, finding one person that would buy that many.
Yeah. And that's a great scenario. So this is our first client with Physician Wealth Systems, and he was a lender on I had met him through another real estate investor at a mastermind. Come on, you guys got it. I mean, success leaves clues, right? So these are all these things that you put together and work out. But he started we did a buying list on the ocean in New Jersey, and it was, $500,000 property. We had never met each other. We had done this deal where he lent the money, and it was a great deal. It worked out great. He was able to make, I think it was like $13,000 or $15,000 in interest on that deal. It was a short deal. We only held it for like 30 or 60 days or something like that. That was our first as a private lender. And I run this idea about, hey, we're going to start plugging physicians in to our acquisition machines to, build these portfolios. So he was the very first client. We did 3 properties first. We did that in the first 3 months. And then we was the first client to do the 12 properties in 12 months. And it's a big push, and there is a lot there, but there's a lot that our team is able to take the reins on and just really drive these things through, leveraging our relationships. And I talk about that a lot. There's more to leverage than money, right? Leveraging relationships is huge. And when you have those relationships in real estate, it enables you to do amazing things.
Have you had any stumbling blocks along the way, and what lessons did you learn
Absolutely.
from them?
Yeah. Lenders has been, and when we first started, we watched the cost of money double in 12 months. And that's crazy. And that's been a major challenge as well, too, as we build these relationships, Jack, because when we are working with inside of the box lenders doing outside of the box things, flags come up and say, hey, we can't do this. This is your debt to income ratio is not on par, right? But we're putting these things together in investment scenarios. So making sure we're working with the right lenders is really important. And I tell everybody all the time is you're going to find what you're looking for. So, and if your mind, you understand the lending process and you know a product specifically what you're looking for, I'm going to get these under my LLC. I won't have minimal prepayment penalties. Maybe I can have the choice of prepayment penalties, what kind of rates I'm looking for, seasoning requirements, all of these things. Just because the bank in town doesn't provide what you're looking for doesn't mean that you can't find it. So if you know what you're looking for, you'll be able to find it. That's really big. And understanding the qualification process, that's really the biggest challenge that we've had, putting all of these together and learning the different loan products. So currently what I think is an interesting approach with the current cost of money market is using 5/1s, using these short-term ARMs, adjustable rate mortgages, to get the seasoning required. And then 6-month seasoning reduces your rate on a DSCR loan. So then we could turn them into DSCR on 30-year fixed. So it's just finding these right solutions with the right people is really important, and creating that path forward. That's definitely one of the bigger challenges. The other challenge I would say is on a volume scenario is working with people. It's fascinating. It's joyful and fascinating at the same time, right? But at a certain price point of home, certain condition of home, you're going to run into certain types of people, and being able to assess, understand, and work with them is also a challenge. Wholesalers can be good, wholesalers can be horrendous. And it's just like mentors. Mentors can be good, mentors can be horrendous, right? Just know who you're working with, understand, their experience. When you ask, hey, how many times have you done this? How many deals have you done this month? All of those things help you understand how you may be able to work with them in the future.
Mm-hmm. Well, Brett, this has been a really interesting conversation. We've kind of jumped on quite a few different things. Before we switch into the rapid fire questions, is there a question or concept you wish we would have covered here today?
Great question. No, what is fascinating you in the real estate market today?
Well, it's the economy is always kind of one of those things. I find it really a strange time. Although we're seeing the rise in interest rates, and we are in my market anyway, we haven't really seen a huge slowdown in the buying and selling of real estate at the moment. You know, there's this, you'd think it would be more impactful than it has been.
Mm-hmm. What's your market?
I'm up near Fargo.
Okay.
We are kind of insulated. You know, when 07, 08 happened, we were a little insulated regarding some of that. Our property values barely changed. But yeah, we kind of shifted our model a little bit south. You know, we're kind of working with some of the lower cost properties because, you know, the buying pool kind of shifted down to less expensive properties. But if you hit the right numbers, it's still churning relatively on a regular basis.
Yep. Yeah. Very interesting. Yeah. What's going on is very interesting for sure.
Yeah.
There's always opportunity though. Always
Opportunity. Exactly. Well, again, physicianswealthsystems.com. And if you're ready, Brett, we'll jump into some of these rapid fire questions.
Bing, bing, bing. Ready.
What lie do real estate investors tell themselves and sometimes to others?
Everything is great. Period.
That's probably true, right?
Yeah.
What book would you recommend, or what are you reading right now?
Great. For beginners, The Purple Book. I mean, The Purple Book is a wonderful, Rich Dad Poor Dad is a wonderful mindset shift. You got to start in the mind. Anything that you can focus on your mind, the power of now, being present in the moment, all of these things is really important. I think that's the foundation block to set you in a new direction. The book I just finished is How to Speak to Anyone and Anybody. I love that. That's a great book as well, too.
Sure. If you could go back in time and give your younger self one piece of advice, what would that be?
Surround yourself with the right people. Think about where you want to be in 10 years, who you want to become to get there in 10 years, and then find somebody that's doing that already and cut the grass, whatever you need to do, take their trash out, be persistent, and just make it happen.
You know, one of those things that I've been thinking about more and more is the concept that, you know, you got to be around those like-minded individuals, or being this, you're the sum of those people. Yeah, unfortunately, you also have to make those hard decisions of who in your circle
Disassociation.
that you need to disassociate with. Yeah.
Yes. Yeah. Even if it's family sometimes too, that's the hard part.
Yeah. What single strategy, process, or tool have you implemented that has had the biggest time-saving impact to your business?
Airtable. Airtable has been another inflection point for us. And I if the listeners have not heard of it, it's like Google Sheets on steroids. I absolutely love it. It's enabled us to basically design a platform for our needs. So I really love Airtable.
Okay, great. Well, Brett, this has been great. Again, I'm going to direct everybody to your website, physicianswealthsystems.com. But this has really been a great conversation. You brought a lot of value here today, and I hope you'll consider coming back sometime.
Awesome. Well, I really appreciate it. Physician Wealth Systems, it's singular on the front side. Systems is plural, though. Absolutely. Thank you again for the invite. And I would love to come back. To listeners, you know the drill, right? If you put the thumbs up on the YouTube, but if you're listening on Spotify or Apple, make sure you leave a good review for sure. It helps the show out a lot.
I appreciate it. Have a great one.
Thank you.